Hey everyone, welcome back to the channel. Today I'm going to give you a complete update on my Adobe Leap option position. We have a lot of important strategy to break down, so here is what we are covering in this video. First, we'll look at my portfolio status. I'll show you my exact contract entry and my current cost basis, so everything is completely transparent. Second, and this is the big one, I'm going to explain why I sold my 40 shares to buy a leap option instead. I'll show you the exact math behind how I used that drop to control 100 shares instead of 40. Third, we'll look at Adobe's business fundamentals. We need to check their revenue numbers and free cash flow to make sure the company is still a rock solid investment. Fourth, I'll explain my rollover strategy. I'll show you why I roll my option deeper into the money to protect myself from premium decay. And finally, I'll share my exact exit blueprint. I'll tell you my target prices and exactly when I plan to take profit or exercise this option. This is a packaged update, so let's dive right into the numbers. Before we jump further into the math, I want to take a quick step back and share the core motive behind this channel. My name is Govind and I'm a scientist by profession. Because of my background, I love looking at data, patterns, and logic. I have a deep interest in finance and I manage every single dollar of my family's wealth by myself. The goal of this channel is complete transparency. I share every single financial move I make. You'll see all the stocks I buy, how much I allocate to my Roth IRA, 401k, and HSA. So, no secrets, no hidden agendas, just real world data and real world solutions. If you want to build wealth alongside a community focused on data-driven strategies, please subscribe to this channel and join me on this financial journey. Now with that out of the way, let's talk about why I changed my Adobe shares into option. So before we get into any specific trade, let's understand what a LEAP option actually is. So LEAP stands for Long-Term Equity Anticipation Security. That sounds complicated, but it just means an option contract that gives you a long-term flexibility to hold stocks, usually expiring anywhere from 1 to 3 years out. The biggest reason investors use LEAP is leverage and low capital requirements. It lets you control the exact same amount of stock for a fraction of the cost. Now, let's look at a math on the right side of the slide. And this is the real one. So I'm explaining this on the basis of Adobe. So if I were buying the 100 shares of Adobe at current price, which is 222 per share, I would be paying 22,200. But because I use this LEAP contract, instead of 22,000, I paid around 10,000 only. So I'm still holding this 100 shares of Adobe, but I'm paying half of the price. And my this contract is in around 90 delta. So if you say precisely, I'm holding 92 shares of the Adobe by just paying 10,000. So let's look at this contract. So whenever I buy LEAP option, I try to buy as much time as possible. So in this case, this option expires on 28th of January. So, and this is deep in the money LEAP option. So the strike price is $120, 120, and it's a call option. And at the time of purchase I paid 9,900, and that's my cost basis. And so far this option has given 20% return. So it was only on June 24th when the share price of this option, the share price of Adobe was 206. I bought this option contract, and so far it has been in profit because the share price moved. Right now it's 223 at the time of this recording on Sunday, and my unrealized profit is $1,984 with what you see here. This is just showing all the different changes I made with the Adobe position, and I'm going to explain them one by one. So on June 15, I bought 40 shares of the Adobe, and at that time the share price was 206. So I bought 40 share, and within 15 minutes I sold them. And the reason why I sold them was because at the time I felt like Adobe is really undervalued and I should be owning more shares of Adobe than just 40. And the only possible way I found was buying a leap call option. So immediately once I sold and made a profit of around $36, I bought 80 delta call option at a strike price of 155, and for that I paid $8,380. So if you multiply this 83.80 by 100, you'd get 8,380, and this is what I did. But few days later, this Adobe stock fell further, and on 24th of the June, the price went to 196, and I thought I need to increase my delta, and only reason because I'm feeling this stock is really undervalued. And when I bought it at 155 call, my delta was 82, and I wanted to increase the delta so that the break-even price would further decline, and that's why I paid like extra. So at the time I rolled over my option. So what happens is, whenever you want to buy a new contract, instead of selling that contract and rebuying, it's always better to roll over the option. And so in that period of time, sometimes the stock fluctuates, and let's say it increases, right? It will be difficult to get in, and you literally you are making a loss. So it's better you don't sell it, just roll over the option. Even Robinhood has this. I do all my trades in Interactive Broker, and there's an option in Interactive Broker where you could do this. So what I did was I went further down the money. So from 155 call to I went to 120 call. So from like 82 delta, I went to 91 delta, and 91 delta, and for this I had to pay like around 1,500 more at that point. So I paid like $9,906 for this contract, and because the stock moved down, I experienced a loss of $678. And from there the stock moved in upward direction. So because this is a leap call, anything that goes up, I would be making a profit, and that's why you see at present on 20 so July 10th, at the time of recording, this option has gone to 11,892, and that's why you are seeing a profit of 1984. But if you calculate the entire change or the net profit I have made on this so far is 1342. As I said, I gained 36 on the shares I sold, and I lost because the 678 because the price went down, and I rolled the option, and from there it has increased 1984. So this is what I have so far. Now let's talk little bit about Adobe numbers. So the only reason this company has fallen from 600 per share to this value like 200 right now is because of the AI fear. I do not see any fundamental change on the business. So if you, this is a 5-year revenue and the free cash flow. So if you look the change in the revenue, you would see on average it's increasing by 10%, and there's a similar story with the free cash flow as well. I know they give a stock based compensation, but it's 10-15% of the total. And if you do an evaluation of the numbers you are paying right now, it's somewhere around, price to free cash flow is somewhere around 8.54, and if you add up the stock based compensation it will go to like 10. So here's a company that has a gross margin of 88%, a return on investment capital of 41%, and is trading at 10 times multiple. So this is, according to me, this is a great value, and that's why I converted my option, my stock from 40 stocks to controlling 92 stocks right now. And I do not always trade option. It's only few times I go all in, and it's only when I see there's a mismatch between the fundamentals of the company and the price the market is putting into this, and I see a value here, and that's why there's certainly something to be made here. That's why I have invested on this leap option. Now let's come to what are my plans further. So as long as I trust the business and its number, I will be in this option. And let's say for now, as I was showing, I'm somewhere around 18%, 20%, somewhere around this range right now. And if this option moves up, I would almost be making double than my that my stock would make, and it's a leverage, you know that. So if it falls, it goes other ways too, so I'd be making double the loss. But let's say what are my plans with this option. So if the stock moves quickly like 300 or 350 to 400, I must exit this option and gain my profit. But let's say it's moving like 10-20%, next year I may roll this option again. So right now the maximum time I'm seeing is 28th of January 2028, but in few months and maybe a year there will be option will expand to 29th. So I may roll that option. But if it falls further, let's say there's something, some event happens and the stock falls 40%, right? In that case, I will roll the option and again add some money, and I'll go deeper into the money. So right now my call is 120, I may go to 80 call, and because I trust the company, and if the stock rebounds, I'll make money in that case. So whenever I do call option, I only enter in those companies where I have a full trust and I can bet on this. So these are my plans with this option. If you have some suggestions, please comment. And again, this video is for entertainment purpose only. I am not a financial advisor, and I do not suggest anyone to invest based on what I do. Thank you.